apologies that I can't be there in person, but it's great to join you all here from New York, and hopefully catching up with most of you soon here, either in New York when you come over. Please drop a note. Otherwise in Germany. So it's a pleasure to be the final speaker of your event. It's probably exhausting, and I can imagine it was very full agenda. So what I would like maybe to present shortly to you is two things. One, I would like to give you a short update in terms of how we think about at Deutsche Bank about corporate venture capital. Couple of themes which we are taking from our setup. Would shortly put in as well what we are seeing currently in the market in terms of developments, and then secondly, as you mentioned before, in terms of the trend of going earlier and earlier, how we at Deutsche are thinking about how we can work with founders, entrepreneurs earlier, and what kind of concept we have set up, what kind of structure we have set up, and how we are dealing with it. Overall, if there's any question, I'm not sure if it's possible to do it within the session from a logistical perspective. I'm happy with it. So if someone has a question, please raise it. If it's logistically easier to do it at the end, happy to do that as well. So whatever works best. So with Deutsche Bank, we have a corporate venture capital team, which is a federated team as well with the businesses, and we focus on three in particular items. And I think if I heard it correctly before, you said the four things which are needed from a startup are team, passion, money, and experience. So we try to help with a few of those. So first of all, we invest, and from an investment perspective, we are pretty much set up like many of you and most of you, at least what the surveys show. We do it from our balance sheet. 60% of corporate venture capital teams are doing it from balance sheet. So do we. And our focus is in particular on Series A, Series B companies, which, by the way, there was a survey done earlier the year, around 300 corporate venture capital teams. 96% are as well in that bucket. And I think it makes a lot of sense in terms of focusing on Series A, Series B companies. And that's where the companies are ready to work with larger organizations, banks, financial institutions, but as well as other companies. So that's usually a sweet spot for many corporate venture capital teams. The second focus, and you see it on the left on the slide, is create and incubate. And I will, in the second part, will deep dive a little bit more into that one. That is our entrepreneur in residence program. And that's where we try to work with startups and entrepreneurs even before Series A, Series B. And from our perspective, it needs a little bit of different partnership when you would like to work with startups and entrepreneurs which are younger. And the third one is growth. And from our experience, it's very important to work, not only give the companies capital, as you said before, the money piece, but the experience piece, and sometimes as well the passion piece. That is something where we can assist. So every investment on our portfolio, and we have 24 companies in our portfolio that reaches from private bank, corporate bank, investment bank, and central. We have dedicated business development specialists for helping these kind of companies. And that can be on topics of how to recruit, that can be off topics around how to manage data, that could be on topics of the next funding cycle, to introduce them to new funds and investors. So that kind of supporting them to grow externally, but as well with us in Deutsche Bank, since every investment we are doing is always strategic. You see on the right-hand side of the slide our central themes. And I could imagine that many of those are close to your heart as well, since most of those topics are really enterprise, and these are our enterprise themes, where we are sourcing against, and like you as well, that is the biggest biggest job of us is to find the right targets and then bring them into our bank, to Deutsche Bank. These are the nine themes which we currently focus on, and that is part of our innovation strategy as well, to get those startups into the bank. I mentioned at the beginning the current market dynamics, and as I mentioned, we are focusing on Series A, Series B. We'd like to share a little bit in terms of what we are currently experiencing in the market, and it might resonate with one or the other. Probably if we would have that presentation 4 or 5 months ago, the market developments would have been completely different. But what we have experienced in the last 4 or 5 months is that we are seeing quite a disruption on the public market, which goes now into the private market. You have seen stock markets around the world, in particular on the tech side, went down significantly. When you see in particular the ones which IPO'd in the last 6 to 12 months, we see actually discounts of 50 to 80%. That is something which, in a second step, we have now experienced in later stage companies. So companies which are close to IPO or in a later stage of their cycle, the E rounds, we see already, in particular in the secondary market, and when now the first iterations of new funding rounds are coming, quite significant discounts. And these discounts can range from 20% minimum to 40 to even 50%. And that is something which is obviously from a downward pressure coming from the public market now down. We are experiencing on our side of the market not a huge shift yet on the earlier side, Series A, Series B, and in particular on the C side. But we're experiencing that the inflow of capital overall in the private market is obviously changing, and that will have as well an impact in terms of the ability to fundraise. That will have an ability for many companies as well in terms of the first funding amount. I think these are things where, from our perspective, when we invest and when we advise companies to invest, to set the valuation right as well, to make sure it's a sustainable growth model. So that is something which we currently see in the market. Obviously, the big topics which are driving it is inflation, which we experience around the world. Interest rate from a central bank perspective here in the US, the Fed has raised already the interest rates. ECB, the talks are currently going on as well in terms of the first interest rate hikes. Obviously, the Ukraine crisis. We see the lockdowns in China having an effect as well on the global supply chains. So there are many parameters actually impacting such overall development. I like to draw and shift gears a little bit to move into the second slide, and that is our entrepreneur in residence program. As I mentioned at the beginning, there is a pretty well-formed setup out there for investing into Series A, Series B companies. And as mentioned before, I think the business development part is really key to it, since the question for founders is always, why should I take you on a cap table? And I know there are many corporate VCs in the room, and finding the USP for your corporate venture capital in terms of why a founder should take your money is obviously key. But therefore, from our perspective, one strategy is as well to work with entrepreneurs and experienced entrepreneurs early on to help them shape the company. And that's why we created an entrepreneur in residence program. So let me quickly walk you through how our entrepreneur in residence program works, how we are working with entrepreneurs and founders pretty early on, what kind of incentive models we have set up, and how we made it, from our perspective, very, very founder friendly. So there are in particular two ways how we work with entrepreneurs. It can be an idea which is Deutsche Bank developed. So an idea where we believe we have an idea which is a business or which could create a business, but it's from a pure Deutsche Bank perspective, it would be not attractive enough. But from an overall market perspective, it's an attractive business model. The second way of an idea would be it's something where an entrepreneur comes to us and we see an opportunity that this one is attractive for us as a corporation. So it can be inbound or outbound. The setup of the program is usually a 6-month program, and we're working with the entrepreneur or startup, and it can be literally, it could be our first ones literally came with a presentation. With a couple of slides. They were serious entrepreneur. They sold already to companies before, to Fortune 500 companies, and they started their new idea. And usually, what entrepreneurs are looking for when it's in particular early on in their journey is to test their hypothesis, their idea. And for testing the hypothesis, what they usually need is client feedback, data, and that is something. Seeing the people in the room and seeing the participants of the conference, that is something we as corporates can bring them. Due to our scale, we have that kind of very often data. Not always very organized in our organization sometimes, but it is out there. And secondly, we obviously have the assets, which is very often our client base. So that is something which we are bringing to the table to the entrepreneurs early on and saying, if you would like to test your idea or work on our idea, we give you access to our subject matter experts. And that's back to the point I think the US moderator mentioned before with experience. Even a very experienced entrepreneur, at the beginning, you're not sure about your business idea. Does it really work? How will the client react? So testing that kind of idea with a corporate and with the clients of the corporate is something very very valuable. The second parameter from our perspective, which is key in such a program, is how do you create the right incentive structure? And what we have seen in the market, there are several entrepreneur in residence programs out there. We, from our perspective, believe that the ownership of the company needs to stay with the entrepreneur. And the simple reason for that one is incentivization. If they are not driving the company, and if a corporate will take on too much of an equity early on, the entrepreneur is not entrepreneur anymore. It feels like being in a big organization and doesn't have the incentivization in terms of driving its company. So that's why, from a structure perspective, how we have set it up is the 6-month program comes together with an option to invest at a discounted rate. You can think about it as a call option, how we would say it in banking, for safe. And that gives the entrepreneur obviously the complete freedom. He still owns the company, the idea, works with a larger corporation, develop that idea further, tests several hypotheses, ideally gets the first client contract or first bigger client contract with that organization, and in parallel then have the ability, actually from a corporate perspective, to be a strategic partner as well on the equity side. Feedback was, we started that program a year ago. Feedback was very, very positive on the founder side. Not only here in the US, but we started as well in Europe. So it's a global program. We're currently working with potential new entrepreneurs which are joining us actually from Germany. And what I mentioned in terms of the incentivization of that structure, that is actually at least what we are currently seeing in the market as being required to attract the right entrepreneur. The old entrepreneur in residence programs, where sometimes people are asking to pay to be part of a program, or where larger parts of equity is directly taken at the beginning of the program, we have seen that at least from our strategy perspective doesn't match to attract the right entrepreneurs. From our perspective, what are the benefits? First of all, access to talent, which sometimes larger organizations don't have. Entrepreneurs don't want to work for larger organizations. That's why they are entrepreneurs. Secondly, speed of execution. We see developing an idea in-house versus a topic which has more network effect externally, outside of the boundaries of a larger corporation, and in our case, even with a lot of regulations which come associated with it, as a huge advantage in terms of execution speed. And then obviously it's bringing innovation from the outside into your organization. All in all, it's a structure which complements, from our perspective, very well the corporate venture capital model. So the pure investment part, but as well having the chance to work with startups which are early on in the cycle. So let me maybe pause here and start a dialogue or take any questions from the room.